We are hearing more evidence the recovery is taking hold when it comes to the economy. We learned on Friday that employers added 236,000 jobs in February. The number is better than expected. So joining us now to talk about this and a lot more is new CBS News analyst Melody Hobson. Melody, how are you?
Great, thank you.
So let's talk first about the jobs news, because it was good news, better than expected, but 12 million Americans still unemployed. A lot of them are discouraged workers. Does that get better anytime soon?
Yes, it gets better and better. Success breeds success. And the one thing I think these discouraged workers who say, oh my gosh, there's probably no job for me, they'll start to see that unemployment number continue to drop. They'll get more optimistic. And the silver bullet here, the driver is going to be housing related, construction. Housing is the silver bullet. The largest number of unemployed people are construction related. As those roles start to fill and the related industries that benefit from housing also start to grow, we'll see that unemployment number continue to drop and drop and drop. And let's not discount the baby boomers, because many of them have been looking at these torpedoed 401k plans after the financial crisis. And now they're saying to themselves, you know what? My 401k plan has actually recovered. It's back to where it was, if not even higher. And so some of them are now saying, maybe I won't actually go back to work at all. Maybe I actually will retire. We
heard all these warnings about potential layoffs surrounding the sequester, right? A lot of warnings came out. Yet this past week on Wall Street, 4 record-breaking days. The markets are in new territory right now. How do we square those two things?
We square it by just realizing that the market is saying they've priced in the bad news. Everything about the sequester, everything about the dysfunction that we've seen in Washington has been well telegraphed to us. We've heard about it day in and day out, and the market says we know about 700,000 potential government jobs that may be lost. We know about a slowdown in the economy that may come. But even with that, what we're saying is we think we can ride this out over the long term because corporate America is in good shape. We're walking off all of the Washington news.
I want to talk more about housing. You mentioned housing being the silver bullet. This is something a lot of people are watching very closely. This is a housing recovery that you think has taken hold now everywhere?
It's real. It has legs. This is no longer green shoots. Remember that phase?
Yes,
We're actually in it. And you're seeing it in so many ways, not only home prices going up, construction actually starting again. Inventory levels are so low right now. There are about 1.5 million houses on the market right now. Normally, there are about 4 million. So if you just look at people's needs and supply and demand, we're going to start to see new construction.
Better time to sell or buy right now, housing?
I actually think it's a better time to buy.
To buy.
I think prices are lower than they will be. So if you're a buyer, I don't think you're going to see these levels again next year. And then the year after that, I think the prices will be even higher. So I think I'd be a buyer.
One more thing coming up here. In May, Congress starts talking about the debt ceiling yet again. Last time they talked about the debt ceiling, there was a lot of market turbulence. The Dow, I think, was down 19%. Do you expect the same tumult this year?
Possible, but I think we're becoming more and more numb to these discussions. I think the market is saying whatever is going to happen, and the U.S. economy will adjust to it. It's unfortunate that this is these events keep going back and forth, but I do think at the end of the day, anything can happen over the short term, but over the long term, the trajectory for the stock market is up.
When the Great Recession hit, there were a lot of people who said, look, it's going to take at least 5 years, maybe longer, to complete this recovery. How far into the recovery are we right now in your estimation?
Early innings. We're in the early innings of this recovery. It was a very, very prolonged slowing of the economy, and I think as a result of that, we will have a prolonged recovery. We are in the early innings, and especially because we're in the early innings of this housing recovery. Housing took us into this debacle, and it's going to bring us out, but it will be over time.
Years.
Years, yes.
Melody Hobson, thanks very much.